Hi, everyone. I'm Mary Wisniewski. I'm an editor at Bankrate and a longtime FinTech reporter. And I am delighted to be in conversation today with Melanie Hardin, who is the innovation principal at Verizon. Melanie, hello. Thanks for joining the chat today. Let's kick it off with just talking about yourself a little bit to give the audience an idea of who you are.
Yep, sure. Thank you. And I am also delighted to be here. Thank you so much for inviting me. I'm at Verizon in an innovation group right now in the domains called financial services domains. And so what we're looking at here is the impact of embedded finance for this particular presentation in a 5G environment. So I'm here to represent that. I've been at Verizon a while now, but prior to that, I spent almost 25 years in the financial services industry directly, working with Schwab and Wells Fargo and ADP and LPL, and did a lot of FinTech startups. I spent a lot of time with private equity firms and venture capital firms looking at innovative spaces and innovative investments. And I do a lot of advisory work with them. So that's my background, and I'm super excited to be here.
Well, we're going to have a lot to chat about. And I'll just mention it right now that if anyone has questions along the way, please drop them in the chat and we'll do our best to answer them. But I think a great place to begin is to just set the stage a bit of like what's been going on in the world. Clearly, there's been a pandemic going on for more than a year. Digital banking is accelerating, FinTech is accelerating. You know, how has the pandemic affected your industry and what are you seeing, Melanie?
Well, it's really interesting. I mean, I think if I had to say it in two phrases, one would be accelerated digital, which you kind of touched on, and then the staying power of that. And so, you know, we've been looking at our usage levels in the consumption levels in our database, and they're from year on year, March 20 to March 2021, there's been a 31% pre-pandemic increase in internet consumption on our network. So that says something to us. That says it's a pretty clear indication that it's kind of here to stay, and that it really is accelerating the byproduct of digital. So we kind of look at it as though digital has shifted 5 to 7 years ahead from where it would have been pre-pandemic. And I think that's kind of an interesting way to think about it. Like, of all the horrible things that have come out of the pandemic, shifting ahead 5 to 7 years in this space is pretty interesting.
Oh, yes. I mean, that's like wild if you think about it, because you always hear the numbers year after year thinking, oh, this is mainstream, but now it's just that much more. And clearly this will have implications for embeddable finance, but that's one of those words that I know people have different definitions, and there's a lot of chatter about like FinTech is everywhere, but of course it's a bit more nuanced than that. Banking is heavily regulated, and I want us to break it down a bit of like, you know, how do you define embeddable finance? Let's just start there.
Yeah, thanks for that, because when I was asked to speak on the conference, I actually kind of researched what it meant, and there's really a few definitions out there, and there's little distinction, although some have tried to make it, between embedded finance and embedded FinTech. And so I'm not going to discuss gradations of gray here, but I would begin to define it by asking the viewers here a question. Would you rather lose your wallet or would you rather lose your phone? And I know my answer, and I think the majority of people listening and watching this would say, oh, I'd much rather lose my wallet, because embedded finance is on your phone. And so there's a perfect example of there's financial products and services and information on your phone. So it's already embedded there. So I think that if you think about it that way, that's one definition, or that's one way to think about it. The definition I would go with is that it really just creates a step in a workflow of any business that keeps people in your store or on your website or on your app without having to leave.
So it's like the best real estate from the consumer's perspective. Well, that just makes me want us to get into some of the opportunities here, especially for the banking audience members. It's all about like, how do you make money? And I know a lot of bankers are stressed out about, what are new revenue sources. Some banks, for example, are not charging overdraft fees now in the wake, well, not even in the wake of the pandemic, just as a reaction to the pandemic. And I'm curious of, how do you think about revenue opportunities for embeddable finance? What should executives or innovation scouts be looking for?
Well, if you're an existing financial services company, I think there's probably three reactions you can have. You could kind of run away from this. You could run towards it, or you could sit on the sidelines, but it's really not going to go away. I mean, more and more and more people and companies and consumers, and that's what we've seen. Consumers they really want to stay on the digital platform. So once you've done digital, you're highly unlikely to ever want to go back to your branch. Now that you say, gee, my branch is open, I'm going to go down there now, and I'm going to just not use my digital device anymore. Thank goodness the branch is open, and I get to go stand in line down there. So nobody's doing that. So I think if you're a financial services firm, your clients and your consumers are going to start demanding more and more and more digital and embedded financial products. And so there's a lot of people looking to get into it, and there have been some interesting use cases of success. So one that comes to mind is Goldman. The Goldman Bank and MasterCard partnered with Apple. So Apple was looking to create a credit card opportunity revenue stream for them, and I'll talk about that in a minute. And so they partnered with Goldman Bank and with MasterCard. And so you can download when you go onto your iPhone, which most people have. A lot of people have iPhones. There's a little Apple Wallet. There's a clicky button on the top, a little square thing, and you can click on that, and you have already on your phone an application for a credit card with Apple. Everybody that has an iPhone has an application for a credit card with Apple. So if you go into an Apple store and you say you can't afford that new iPhone, they're gonna make sure that you know that there's a way for you to be able to afford it, and it's right there on your phone. So if you did that, you get a credit card, but it's never mailed to you unless you ask. It's all on your phone. So there you are. You have an Apple credit card. It's accepted wherever Apple Pay is accepted and MasterCard's accepted, and you get cash back, and it's an instantaneous cash back. So it's kind of cool. But there's an example of the way Goldman was able to acquire clients in a relatively inexpensive manner. And clients, I would argue, probably were not otherwise available to them. And so now they've got a whole bunch of these clients on there, and they're making money that they otherwise couldn't have made. So I guess I thought that example was pretty interesting, just because it's an unlikely alliance, and everybody's trying to reach millennials. They are harder to reach. There's maybe more proportionally in Apple stores or on Apple products than there are elsewhere. I don't know if that's a fact. I'm just hypothecating that. So I think there's an example of how a financial institution, several of them, both Goldman and MasterCard, were able to participate in that as well. And at Verizon, we also have a partnership with MasterCard, which we think is great. So based on our new 5G devices, and 5G is, what we think the way of the future is, you have a MasterCard embedded on your phone as well, and your 5G enabled phone that makes for contactless payments. So there's another example of one non-financial, one financial company partnering to just kind of move the whole thing forward, which I think it's fascinating. I think it's interesting. And I think everybody, really everybody, almost everybody be looking at something like this for their business.
So I love that illustration, Melanie. And I want to drill in more from the Verizon perspective. But before we go there, there's also risk. I know, maybe there's things people should be watching out for. And we had a little chit chat ahead of this panel, and I know you pointed out some things like don't chase the shiny object, for example. But let's get into some of those points of watch out for this, or here's something that could go wrong, or this isn't right for this reason.
Yeah, there's a lot of things that can go wrong. So if you're not a financial services provider and you're not in being a regulated entity right now, and you want to offer some kind of embedded finance product in your workflow, you should be really careful because there's a huge amount of regulatory oversight, audit, money laundering, international wire transfers, all kinds of things that can happen that financial services firms have been regulated on, audited on, and have procedures on for years and years and years. So the biggest risk, I think, is trying to go it alone. I think you need to get a partner in there that's regulated, that really knows the lay of the land and really understands how to operate in that environment, so you don't find yourself afoul of the SEC or FINRA or the FDIC or any of the government regulatory bodies in the federal government or the state governments. So that's the first thing, trying to go it alone. The second thing is really who you choose as your partner, because you could have a great partner, or you could try to go with a partner that maybe is a less known partner that you're not familiar with, but it seemed like a good financial deal. But if your website gets attacked and there's data pulled out of that, your consumers that gave you that sensitive information to participate in your embedded financial product really don't want to hear that it was your partner's fault. In their minds, it's you got hacked, and even if you didn't, even if it was a partner that did, they really don't care. So you have huge brand risk, and you have financial risk, because clients could leave, and then and they can tell everybody else not to go to you. So I think those are the two biggest risks, is trying to go it alone and then being careful who you pick as a partner.
Yeah, and those are, you probably scared some people in the audience with that. You also mentioned all the opportunities, and so let's drill a bit more into that. From Verizon's point of view, you mentioned 5G, you mentioned MasterCard. How is Verizon fitting into this whole embeddable finance puzzle?
Yeah, because some people might be looking, going, why is a telecom here? But I don't know why we wouldn't be here, to be honest with you. My position on this, and the way I've talked about it in other groups, is that we're the rails that all the trains are going to ride on. So, like, just basic terms, you really can't do embedded finance and mobile finance. They just simply don't work without reliable connectivity. And that's where we come in. We're the rails. So all the trains that you're hearing about throughout the rest of this seminar and conference, and you're thinking about, they're all going to have to go over some carrier. They're going to have to ride on rails, because you can build the best single app that you can have. But if the system's down, or they can't access it, or it's a remote location or a highly dense location that people have to sit there and wait, that's not going to be a good experience no matter what. So we introduced 5G, and it's a huge thing for us. It's a huge future strategic growth area for us, because it really does create opportunities where none other exists. So without getting into a lot of the technical terms, since that's really not my background anyway, but there's something called low latency, which is just basically low downtime, low delay. So 5G has this massive ability to have like really, really, really low delay. I mean, like no delay at all that you would notice. So it really makes it ideal for payments like mobile payments, or for apps like mobile payments, or applications, or autonomous checkout, cloud point of service. So those, without having delay, are so much more attractive now, and so much more palatable to people trying to use those. We also, with the advent of 5G, have this massive ability for media-rich data sets. So when you have, physical locations dispersed throughout the world, or the United States especially, having all the media-rich capabilities with the capacity that 5G brings makes it a much more enriching experience for any kind of media that you're going to be looking to use. And then we have massive security. I said massive a bunch of times, so sorry, but I get excited about it. But there's like the security level with 5G is there's a lot of enhancement that went into that. So that's a very important feature for payments. I talked about payments a lot, but that is usually the first step for most companies to get into embedded finance is taking on a payments offering. And so with the security feature, having enhanced security is very important for financial movement and payments, because, people have their sensitive data out there, and they don't want to get breached, and they don't want to have their cards stolen and have their money drained out of their bank accounts or something like that. So that's where Verizon fits in. It's a long answer, kind of I rambled, but it really is that we're the rails underneath all the apps and websites that are out there.
Yeah, and being the rails is like critical, as you illustrated, and also that makes me. I mean, your career is not just at Verizon. You've had a vantage point of fintech over the years, and I'm also kind of just curious from your overall perspective. What technologies are intriguing to you? How would you characterize? Let's say embeddable finance, which probably had a different name. I know white label is sort of another way to think about this over the years. I'm just curious of your overall perspective of how this trend has been evolving.
Yeah, it really is interesting because it kind of snuck up on us. If you think about it, there's like when you went to buy a car back in the old days. I mean, you'd want a car and then you'd have to go to a bank and get a car loan and go back to the dealer. But now you go in to buy a car and it wouldn't occur to you like, okay, hold the car. I'm gonna walk down the street to the bank and get an auto loan and I'll be back. Nobody does that, right? Of course, you're just right there. They give you a loan. It's usually a good rate, and that's how you buy a car if you finance your car. So you've been embedding finance and experiencing an embedded finance solution experience for years now. That's just one example. But now I think people are realizing I think the overarching issue is keeping people on, like I said, your website, your app, and your store. You really don't want people leaving. You really don't want them abandoning their carts. You really don't want them walking out, because then you lose the ability to sell. And so with your sales sitting there, the last thing you want is someone being able to not conclude that transaction. And that's where I've been fascinated just watching it creep up, because now we're having a conference about it and everybody's talking about it, but it's really been here for quite a while. And I think it's, the banks and the financial institutions, they've been kind of hamstrung in a way because they are so heavily regulated and they do have so much oversight. And so they're watching a lot of these startups get going. And so I think now you're seeing a lot of banks and financial institutions and brokerage firms and insurance companies really look to let's partner, let's find some partners. We've got to take advantage of this trend as non-financial services companies really move toward wanting to offer it more and more.
Yeah, no, and you're even seeing it like community bank level these days, which I love seeing the fintech community bank partnerships blossoming even more. And we talked about revenue a bit. I wanted to get a bit more into it just because I want us to explore the hook of the non-financial services companies. How do they create additional revenue opportunities with embeddable finance? I'm just curious of your thoughts of what they ought to be looking for versus the banks.
There's lots of companies. Oh, I'm sorry. Yeah. There's lots of companies that offer an experience like that. So I gave an example of Apple. I gave an example of a car company. That's just been around forever. I don't even know if that's worthy to talk about. But what people look at, and there was a really great paper by Plaid in Accenture, where my old boss and good friend Mark Cassidy was quoted. And what he basically was saying is that the margins in financial services are very lucrative compared to, for example, retail. So in financial services, you look at 20% margins. In retail, you're looking at, less than 2.5%. So people look at that and think, I want to participate in that. I mean, who wouldn't, right? If that's what you want to do. I mean, there's companies out there. I mentioned Plaid, they're really on the forefront of a lot of offerings there. And Shopify is pretty well known in the space. And so you could partner with companies that do that for you. And I did talk about partnerships earlier, and they can help you kind of implement that and project manage it and get it going on your website. But I think there's a couple things that I just said there. One is that the margins are going to be good. They always have been, and they'll continue to be, I think. And then, having that ability to complement your revenue stream is important, but also keeping people there to complete the sale. So there's revenue all along those touch points. There's just the revenue that exists because it's a new revenue stream. Then there's the ability to close transactions. And so there's revenue that's not lost. So that's what non-financial institutions are looking at. And I think pretty soon everyone will do it in such a way that you won't even notice. I mean, we won't even be talking about embedded finance because it's going to be invisible. It'll just be there.
Well, that leads to the last question, which is, what is the future of embeddable finance? Invisible. What else? What do you expect to evolve within this trend?
I think the use cases that if we all met back here 5 years from now, the use cases we would be talking about in 5 years haven't even been invented yet. So that said, so I think there's going to be fantastic things coming out of it. But I think what we're going to talk about in 5 years are not going to be something I could even potentially think about today. Not that smart. There's smarter people than me out there figuring it all out, and I can't wait to hear from them in 5 years. But I think, I did mention invisible. I think ubiquitous is another word. It'll be everywhere, and we won't even think about it anymore. I think it'll be seamless. There'll be seamless integration between shopping, buying, checking out, and it'll move into other things. Payments was a great beachhead for a lot of companies, just embedding a payment option on your website or on your app. But it'll move into, there's money movement, money transmission, there's loans. Very easy to get, loans now instead of having to hang up and call, when you go to buy a house, it's a separate process for real estate to get a loan. I could imagine something like that in the future being way more seamless and invisible occurring. Investments are moving, and that is, my background's mostly wealth management investments. And they're moving in a really interesting way. There's a couple really interesting models out there that I've had my eye on. There's one company where you shop in a store, and as you frequent the store and use your card, they give you shares. You earn shares in the company that you shop at. And I thought that, I don't know if that's going to work. I don't know the company, so I don't want to mention it because I don't want to endorse anything I don't know about. I think the model's interesting though. Just abilities like that. That's why I don't want to comment on in 5 years, because there's people I would never have thought of that in my life, but I think it's an interesting concept. Insurance has a lot of things going on. Insurance has typically been historically thought of as a stodgy business, not real innovative. So this is a chance for them to really start thinking about moving toward, like Tesla, for example, offers insurance right in their. When you buy a car, you buy a Tesla, they have Tesla insurance. You get it right there. They found a way to embed that process right in the car buying process. So I thought, that's pretty interesting. There's some startups right now that I've read about where you pay per miles. You pay for the miles you drive at the end of every month. That you drove 300 miles that month, and that's what you pay for. And so you don't have a ubiquitous insurance policy where everybody pays the same thing, or, if I haven't had an accident and my friend has had an accident, he pays more and I don't. It's really, now there's models out there that's like pay by the mile. This is what you drove. Here's what you owe us. You can pre-buy miles, for example, in insurance if you think you can drive like from LA to San Francisco. So like those are models that I think are all future ideas that I've just kind of read about and learned about, that I think there's something there. I think there's a there.
Yeah, no, personally, I love the drive-by miles. I drive 5 miles a week at max. So these ideas are always so wonderful. And bottom line, they're going to save consumers time, if not hopefully. I mean, the big sky idea, of course, is like improve financial health in different ways. But I love just saving time is useful. Melanie, any final thoughts or words you want to leave the audience with?
Oh, no, thank you very much, though. And, if anybody has an interest in learning more about Verizon's offering, you can email me or connect with me. So that's something I probably should end with, given what I do. So thank you for that opportunity. But I am looking forward to following this trend and this thing. So I'm looking forward to any comments that listeners have right now on the chat, or connect with me later. I am interested in just seeing where people think trends are going in the future. I'm open to that conversation. So thank you.
Well, thanks so much. No, thank you. Thanks for your time, your insights. At the last part of this, my dog was licking my feet, so he was excited too. So thanks so much.
Bye.